Welcome back, ladies and gentlemen. Are you into those dividend ETFs, those exchange-traded funds? Well, personally, I'm not the biggest fan. I would rather break down the components in the individual stocks within these ETFs to give myself a better rate of return. But if you are not interested in buying, selling, or trading individual stocks, and you still want a better dividend yield income, what I want to do is show you the top 10 performing dividend ETFs of pretty much all time. And if you are like me, well, I'm going to teach you some of the ETFs that I own as well. It might be a little bit of an interesting video today. So let's just jump right into this. Alrighty, ladies and gentlemen, here we go, starting with the top 10 ETFs for dividend performing stocks. And we're starting with the Vanguard High Dividend Yield, ticker symbol VYM, that basically tracks the FTSE, or the FTSE High Dividend Yield Index, which represents more than 420 stocks that produce high dividend yields. 420. I might bet there's any marijuana companies in here, but I doubt it. This company's been around for quite some time. We all know Vanguard. It's performed very well. The current dividend yield is 2.42%. Something to take a look at. We figure we start with the best of the best, which is Vanguard, but we're not talking about the highest yielders yet, but we'll get there. Moving on to number 2, which is another Vanguard Dividend Appreciation ETF. Pays a bit lower of a dividend yield, but has a much higher rate of return on the equity side of it, which investors looking to hold a basket of stocks of companies that have a record of growing their dividends can consider buying an ETF like Vanguard's Dividend Appreciation Fund. It basically tracks the NASDAQ US Dividend Arc Kivers Select Indexes, which is really weird, a little bit different, but man, this company has done very well, even over the long-term perspective of it. This one never seems to flip around the other way, starting with that 1.72% dividend yield. Now we're going to move on to some iShares. If you haven't heard of iShares ETFs, well, this ticker symbol is DVY. The dividend ETF from BlackRock tracks the index of roughly 100 stocks that have a record of paying dividends for more than the past 5 years, with a current dividend yield of 3.22%. This thing has done quite well. Actually, all of these ETFs have performed very well. The first few I'm going to show you here anyways. The other ones get a little bit more rockier as we head into the higher dividend yielders, but we'll do one more. iShares, basically this one, ticker symbol HDV. Investors looking for dividend ETFs that provide exposure to about 25 dividend-paying U.S. stocks that, according to the parent company BlackRock, have been screened for financial health should consider HDV. The current yield is currently 2.98%. If you could pick these ETFs up on a bit of a dip, because everything's on a bit of a high right now, so seeing these lower yields isn't nearly as appealing. But again, when we're looking at the rate of return these companies have had, it's quite impressive. So let's go into some of the higher yielding ETFs, starting with CVY. Investors that don't mind paying higher expenses to get higher yield may like what they see with this ETF. The fund tracks the ZAC Multi-Asset Index. I have no idea what that is, by the way, which considers of roughly 100 stocks of dividend-paying companies. The assets allocation is about 2/3 U.S. stocks, with the remainder of mixed bag of foreign stocks and bonds. The current yield on this sucker is 3.51, which is low for its average yield of usually around that 4% mark. But this one's been a little bit more rockier. There is some higher yielder ones that are a little better, which we're going to take a look at in 2 seconds here. Moving into KBWB on that ticker, guys. This is a high dividend yield financial portfolio. This dividend ETF from Invesco. Moving into a KBWB, this dividend ETF from Invesco achieves its high yields by concentrating the portfolio on stocks of companies in the financial sector. The expense ratios apparently on this guy are a tad bit high. And sorry, I might have mixed ordered these, because this one, the dividend yield's pretty low for how high the expense ratio is. The performance, though, obviously kind of matches the insanity of how well this is done. But in a position like this, when you start seeing the higher expenses on basically the ETFs, is usually when you want to start looking at the actual holdings within these companies, which you can literally just look up. I'm not going to do that to save some time today, but you can take a quick peek and see what holdings there are, and maybe just try and replicate it yourself by buying the individual holdings themselves. So let's just move on to SDOG, the weirdest name ETF on here. And SDOG essentially is for investors looking to get dividends from dogs of the Dow. Stocks can consider adding SDOG OG to their portfolio. S-Dog tracks the S Network Sector Dividend Dogs Index, which starts with the S&P 500 index, which screens the sector's level to create a diverse mix of dividend stocks. The current yield on this sucker is 2.92%. Not one that I would recommend overall. But again, when we look at the overall performance, guys, no one's really complaining holding this. It's just those high expense ratios are a little ridiculous. And now we're going to move into DES, the Wisdom Tree Fund. Sometimes it makes sense to diversify away from the typical large cap ETFs and add some good small cap dividend ETFs. With this sucker here, to accomplish this goal, DES tracks the Wisdom Tree Small Cap Dividend Index, which according to the Wisdom Tree is an index comprised of the companies that compose the bottom 25% of the market's capitalization of Wisdom Tree Dividend Index after the 300 largest companies have been removed. So this is where we're looking at those really higher yielders. We should look and see what the expense ratio on this sucker is. It'd be nice to see. I looked up some of the earlier ones there, but either way, we're looking at a 7.57% dividend yield. A little more volatility in the equity stock price here, but overall, guys, if you're looking for that higher dividend yield, maybe this is an index you should look at, or breaking down its components. Leaving us into our last dividend stock here, guys, or ETF dividend stocks. SCHWAB, ticker symbol SCHD. Investors looking for a low-cost exposure to top-paying dividend stocks in the U.S. will want to take a look at SCHD. That's a hard one to, it's like a tongue twister. Say that like 1,000 times faster. SCHD. It's a weird one. The fund tracks the Dow Jones U.S. Dividend 100 Index, which includes some of the highest dividend producing stocks in the U.S. The current yield on this sucker is 2.14%, which is not the most appealing one overall. And I wish on Google here we could just see a bit the basic expense ratios, because I only looked up a few of them just to save myself some time here today. Sorry about that. But slap a like if you are enjoying looking at some of these weird ETFs, guys. But this is paying out a 2.14% dividend yield, and it has had an incredible performance over its lifetime. Now, I do not personally own any of these ETFs. The one that I only personally own is VFV for my Canadian investors out there that want exposure to the S&P 500 but don't want to pay for it in US dollars. Vanguard came out with this wonderful index fund right here, which basically just tracks the S&P 500 index, but is all converted to Canadian dollars. So you don't have to do that in your own portfolio if you don't want to, because as many of you may know from looking at my portfolio, I have a mixed bag of literally US accounts and Canadian accounts, so I can keep the money basically diverse, just so when I want to pull out those US dollars, I can do the conversion on my own terms and not just as the dividends come in US dollars or as I decide to buy stocks in US dollars. It basically saves you from the fluctuations in the Canadian currency and allows you to pick and choose when the currency is down to buy and to sell when the Canadian dollar is up, so you can get the most bang for your buck. If I did not say that backwards, I'm hoping. But I hope you guys enjoyed this really quick breakdown of just a few ETFs you probably never heard of before. I suggest doing your homework, because this is just me starting out to give you guys a better understanding of what is available. If you enjoyed this video, just let me know what you guys think in the comment section below of your favorite ETFs. Maybe there's some of these, or maybe there are some that I missed. So stay cool, stay awesome, guys. I look forward to chatting to you real soon.